Okay, so what I also want to discuss in today's session is you had question 4.2 where you had to do the receipts and accrual question for homework. So I want us to go through that question and the solution as well today. So the first thing you had to do is they said advise Mr. A on which dates and why the amounts received or referred to above would constitute gross income, if at all, and based on the principles of receipts and accrual only. Okay, so in this question, they're telling you that they only want you to focus on the principle of receipts and accrual. So that means you only go look at the case law that is linked with receipts and accrual as well. And let's quickly just see where I saved. Okay, let me just quickly open the document again. I closed. Okay. So what they want you to do is to look specifically at receipts and accrual when you discuss it, and then you need to also look at the case law. Okay, so let's read through the examples to see what they've given to you. Okay, so they tell you Mr. A sole trader, is a South African resident. So there you already know he's a South African resident, which means we are taxed on worldwide income. Then they tell you he sold a large quantity of trading stock to a new customer who is starting up his business. Mr. A reviewed the business plan and negotiated the following options of settlement terms with the customer. So he's done 3 types of settlements with a specific customer. So for each of the settlement terms, you need to go discuss the receipts and accrual, whether we would include it as the sole trader in our taxable income for that period. Now the first one, it says the customer will pay a non-refundable deposit of 500,000. Now once it's non-refundable, it means that there isn't a condition that is linked to it. But now the question is, have we physically received it and when? So they will pay a non-refundable deposit on 20 February 2021, and the remaining purchase price will be 10% of the sales of all merchandise sold, and as and when the sales are made by the customer up to and including 28 Feb 2020. The customer commenced the sales on the 1st of March 2021. Okay, so let's quickly see. They do not specify a tax period. So where they don't give you a tax period and it falls over 2 years, you would have to then discuss what portion would relate to what tax year. For example, the 2021 tax year and the 2022 tax year. Okay, so the first thing is, have we actually received the non-refundable deposit? Well, it was paid on the 20th of November. So in terms of the Geldenhuys case, you have to go look at whether it's received by the taxpayer. Okay, so yes, we have received the non-refundable deposit, but then they say the remaining purchase price will be 10% of the sales of merchandise, and they can make the sales from the 1st of March up to 28 February 2022. So the second part of it is conditional on when they've actually sold the inventory. So this is what I said here. It's conditional, and that is linked to the Moy court case. It says as soon as the condition that has been met. So as soon as there's no condition anymore, then I would have to create the gross income. So that would mean the 500,000 would be taxed in the 2021 year, and then the remaining portion, so that 10% of the sales, will only be taxed once we've sold the goods and included in our gross income. Okay, so what you would have to document when you write it down on a test, you would say the deposit is non-refundable and therefore has been received for the benefit of the taxpayer in terms of geldenis. So because it's non-refundable, it's for my benefit. I don't have to return it. Okay. There's also no condition to repay the amount. If there is a condition to repay it, you would only include it in gross income once that condition to repay it has expired or there's no condition anymore. And because it was received on 20 Feb, it is part of that year of assessment. And as I said, the remaining purchase price, the 10% of the sales is conditional based on the number of sales. So the amount they will receive is based on the sales, and they can make the sales from 1st of March 2021 up to 28 Feb 2022, which is the 2022 tax period. And that amount will only then be included in that tax period once we become unconditionally entitled to it. So that's once the sale is made, we will only include it. Okay, so that is point one, what you would have had to discuss for 4 points. Okay. Then if we look at the second transaction, so the second one says the sales will be 1 million rand payable on 1 March 2021. So that is payable on the 2022 tax period, plus 5% of the profits earned by the customers at 28 Feb 2022 if the customer makes a profit of 2.5 million. So that means we will only pay the 5% if they've exceeded 2.5 million sales. Now that is something that's in the future. It is a condition that still needs to be met. It is still uncertain at that stage. They tell you all the goods are delivered by 28 February 2021 to the customer's premises, and the customer commences sales of the goods on 1 March. Okay, so based on that information, that 1 million, that sales price, has it been accrued to or received by us as yet? What do you think? What do you guys think? Okay, so now it says it's accrued to. Okay, so when do you think it accrues to us? Does the sale price accrue to us when the goods are delivered, or once we've actually started commence with the sales? Okay, so now things it commences on commence of sales, which happens on the 1st of March 2021. Okay, so let's look what you would have to discuss here. Now remember, in this instance, you would have to discuss the two entries. The one is the million rand, which is the sales price of the goods, and the second one is the additional 5%, which is earned based on if they make a profit of more than 2.5 million. Okay, now let's quickly see. So even though that million rand sales price is only payable on the 1st of March, you actually became unconditionally entitled to it the day you delivered the goods. Okay, so we've already sold the goods on the 28th of February when we delivered the goods initially. So that's the first transaction. So that first million would be included in your gross income in the 2021 tax year. Whereas the 5%, okay, sorry, there's a typo. So it will be in your 2021 tax year because it ends 28 Feb. Okay, the 5% on the other hand is conditional based on the number of sales that exceeds the 2.5 million. So based on this information, it says if the customer makes a profit of 2.5 million from the sales, we would add additional 5%. Okay, now that is the profit based on the sales. Now that we will only know at the end of February 2022 if they've actually exceeded their profit at the end of the year that they were allowed to sell it. So until that condition is met in terms of MOI, we will only then include it into our gross income. So once the condition has been met, that portion, that 5%, would actually be taxed. Okay, so that first million is the 2021 year. I'll just update the slides and I made a typo there. So just make a note there for yourselves just now. Okay, if we look at the third transaction, we said the delivery of goods has been split into 12 equal deliveries. So now they're delivering the goods over the year. Every month they deliver a portion of goods. They say the first delivery takes place on the 25th of February 2021 and the last delivery 25 Jan 2022. Okay, so what you have to look at here is what does the tax periods look like? So your first tax period, the 2021, would be from 1 March 2020 up to 28 February 2021. Okay, so that's the first tax period. And then the second tax period, the 2022 one, would then be from 1 March 2021 up to 28 Feb 2022. Okay, now that's the first thing you need to note is what tax period are we actually busy with? Because that will determine when you will be taxed, will include it in your gross income. Now you can see the first delivery already occurs 25th of February 2021. Now in terms of your general rule for gross income, you are taxed on the earlier of receipt or accrual. Okay, now receipt is when I physically receive the money. Accrual is when I am entitled to receive their payment. Okay, now once we've delivered the goods, we are actually entitled to that money. So that would mean out of the 12 deliveries, which makes up 2 million, 1/12 of that has already accrued to us on the 25th of February. Okay, so because they've given you an amount here, you would then go calculate that. You would say 2 million times 1/12 will then be in the 2021 tax year, whereas 2 million times the remaining 11 months would be in our 2022 tax year when they are delivered. Okay, the fact that the payment is only made in March 2021 is irrelevant because that is after the first accrual has already taken place. Okay, so that means based on the accrual concept, the 1 month that has already accrued would be included in gross income. So what you would have to write down in a test or in an exam is you would start an amount must be included in your gross income at the earlier of the receipt or accrual. Okay, at the end of the 2021 year of assessment, we've already delivered 1 month's worth of goods, so they are entitled to 1/12 of the payment of the 2 million rand. And then the remainder of the sale, the 2 million less than 1/12 of it, or 11/12, will then only be recognized in 2022 when the payment is received, because that would actually be earlier than the accrue date. Okay, so that is what you would have to have written down then for the 3 marks. Okay, do you guys have any questions on the receipt or the accrual concept based on this question? You guys have any questions? Okay, do you have any questions on the ICE task that you guys had to do earlier? Mabali, yes, it's an attendance ICE, so it doesn't matter what mark you got, you will get that as an attendance one. That's why it's only open during the session. Okay, for homework, what I want you to do is Chapter 3.5, Chapter 4, and Chapter 5 relates to the deductions. So it is your allowable deductions as well as your capital allowances. So I want you to go through that information. In your workbook, they do indicate what paragraphs you can ignore. So make sure you just go take out those paragraphs and you don't focus on it. Otherwise, it is a lot of information. Then I want you guys to do question 5.5, which would then count as iStar 6. I will create a place where you can upload it onto VC Learn. So I want you to do that for Friday. Now the 4th is Monday, so that we can discuss it next week in class. And then 6.2, I'm going to give you to Friday because I know it's quite a lot of information. So I want you to do 5.5 for next week for class. So that's why it's due on the 4th. And then 6.2 is only due on the Friday. Then after that, if you feel I need to give you a little bit more time for the ISARs, just let me know. Then we can push it a little bit, but the marks needs to be in by just after the 20th. So that's why I want to get it in as quickly as possible. And then if you have time, go work through question 5.1, 5.2 in your workbooks, as well as question 6.3. So those are a few nice questions focusing on the general deduction formula, as well as the principles based on the general deductions, as well as specific deductions and capital allowances. Okay, do you guys have any questions on gross income, on exempt income,